let's have a look at auctions first of all, Chris. Just how did we go last weekend, and what's the expectations heading into this weekend?
Yeah, good morning, Pete and Laura. Look, this weekend we're hoping to see some gains in the all-important auction volume number because, as we know, that has been marching lower pretty much every week for some time now. This weekend, CoreLogic is tracking 1,012 auctions around the combined capital cities, and that would be up a fair bit from the less than 900 recorded last week. Now, you're asking about the combined capital city clearance rate, which the final number came in at 65.4%. Sydney running particularly hot, recording its third week in a row above 70%.
So, I mean, traditionally, as we head into the warmer months, more homes become available, the clearance rates tend to jack up a little bit. How much has it got to do with, just sort of seasonal traditions as opposed to people having a bit more money to spare at the moment?
Yeah, a lot.
Following the tax cuts and whatnot.
Well, absolutely. We are waiting to see those sorts of moves from the government and the RBA move into listings. It's been an interesting time because we follow auction clearance rates here, and an auction is typically a few weeks or a few months from the listing. So it does take a little while to feed in. A lot of eyes on September, the start of spring, to start seeing if we do see a lot more listings coming through, because it seems that buyers are quite keen. So it would stand to reason that if more auctions were taking place, then that clearance rate would come down a little bit, but we'd see a lot more activity overall.
Hey, Chris, what did you think of the governor's, the RBA governor's speech yesterday and suggesting that if he needs to, he will cut the rates further?
Yeah, I thought this was a really interesting speech. So this was in Sydney at the Annika Foundation, and Governor Philip Lowe said, we came out swinging, really, in defence of the RBA's target band of 2 to 3% for inflation. A lot of pressure has been put on them lately, saying that that's just too high, because we've been undershooting that for more like 3 years at about 1.3% annualised. And also, on the flip side of things, the unofficial target for unemployment of 4.5% is just too low when we're currently running at 5.2%, and it could gain through the end of this year. So there's been a lot of pressure. And so, yes, Philip Lowe is saying that we could cut interest rates and that lower for longer is what you should expect. So really, that's now being echoed throughout the economics community. I mean, just this week, Westpac Chief Economist Bill Evans said that he's now expecting a cut in October and another cut in February. That would take us to 0.5%. Never before seen lows, Pete.
Yeah, but would they pass it on?
Well, that's a huge question, yeah. What will the banks do? And this is part of what Westpac was saying, was these cuts might have to be coupled with some sort of emergency package from the Reserve Bank to entice the banks to pass it on, because the banks' margins are being squashed at these levels. The cuts are not that easy to pass on. We all, as mortgage holders and everyone out in the market, just says, right, hand it over. But unfortunately, the banks are saying that we can't really do that. So it's going to have to be coupled with some sort of incentive program, at least some of the economists are saying.
Well, Chris, you know what you're talking about better than most people I've spoken to, as a matter of fact. Do you think that those cuts will come? I mean, we're a long way off, or would you have thought that we should just sort of, let's see what happens with these tax cuts?
Yeah, there is a bit of a wait and see, but I do think that we're certainly going to, I believe the economists, with what they're saying, that we're going to see cuts bringing us all the way down to 0.5%. Yeah. The question then becomes, well, how long until we start to see a rate above 1% again? Because it really does feel like the Reserve Bank governor is giving almost explicit guidance that we really shouldn't expect any interest rate hikes for a very, very long time. And so all of a sudden you get this new normal, and then the market adjusts to a new normal, and then what happens? You can't raise interest rates, and you have everybody in, millions of dollars worth of debt. Australia has such an incredibly high level of household debt that any move upward in interest rates could really cause a huge problem. Yeah,
what about that? The RBA says low rates for several years to come. Chris Kohler, thank you very much for your insight as always this morning, mate. Good chatting to you. We'll chat to you soon.